Hi there, my name is Greg Laxton and I'll be highlighting a few key aspects of Multichoice's upcoming unbundling from Naspers. We feel that forecast risk is high given the ongoing decline of linear television. The ever-changing subscriber mix and greater weighting towards the middle and mass markets translates into a lower average revenue per user, as well as potential entry of new competitors into the market. Global over-the-top companies like Netflix, Amazon, and soon-to-be Disney pose a significant threat to the company due to their competitive pricing and content, and due to their global coverage. Given the different scenarios on the next slide, our analysis shows a wide valuation range of between 102 and 222 Rand per share, assigning a probability of occurrence of 60%, 30%, and 10% to the scenarios respectively, results in an estimated target price of 136 Rand. Assuming our target price estimation is correct, the stock will trade on a financial year 19 PE multiple of 11 times and a financial year 2020 dividend yield of 4.2%. The three investment case scenarios are as follows. Firstly, a low single digits increase in subscriber numbers as growth in the mass markets is not sufficient to offset declining premium customers, translating to static revenue and materially lower margins locally, with the rest of Africa operations remaining loss-making. Secondly, a high single-digit subscriber growth with a slow decrease in premium subscribers being offset by strong growth in the mass markets, translating into mid-single-digit revenue growth and slightly lower margins locally, while the rest of Africa operations begin to break even. Lastly, a low double-digit subscriber growth with a decline in premium subscribers being more than offset with strong growth in the mass and middle markets. Low double-digit revenue growth would be expected, with overall margins improving, primarily due to the rest of Africa operations returning to profitability. The group generates about 80% of revenue from subscription-based services such as Showmax and DStv, with the rest coming from advertising and technology. Content cost is the largest item at over 40% of costs, and these costs are primarily in US dollars, which translates into earnings that are sensitive to currency movements. We expect significant improvements in the earnings as profit comes off of a depressed base following losses in the rest of Africa operations. Revenue increased by 5% to 24.78 billion for the 6 months ended September 2018. Average revenue per user declined 6.54% to 200 Rand due to a different subscriber mix. Core headline earnings per share increased by 26% to 352 cents, and revenue per share was up 5.28% to 5,645 cents. The group will pay a dividend of 570 cents per share in the 2020 financial year. Until the unbundling, any required funding will be provided by Naspers, and the only material debt that will be reflected on the group's balance sheet will be the capitalized transponder financial lease liabilities. The group will therefore have minimum financial debt on the date of unbundling. OTT services are driving the growth of video entertainment, and management expects OTT to continue to increase in importance, and the group has therefore built a compelling OTT offering to benefit from the growth opportunity. However, lower average revenue per user may result as legacy products become less relevant and as OTT develops further. Management considers the markets in the rest of Africa to be attractive and well positioned for strong growth going forward, with rising population, improving affordability, electrification, and high pay TV penetration seen to be the driving force behind growth. Before I end off, if you would like to trade, then please contact our trading desk. Investors are reminded that they can refer to our online trading platform, which contains a more in-depth analysis on Multichoice. For more information on how to interpret a trade idea, visit the events section on psg.co.za to access previous trade ideas and how to understand the method of analysis we use. Lastly, I would like to bring your attention to the following disclaimer. Thank you very much.